Good afternoon, everyone. My name is Alexia Alexandropoulou, and I'm a research manager at the African Private Equity and Venture Capital Association. AVCA is the Pan-African industry body which promotes and enables private investment in Africa via research, training, networking events, and advocacy. Today's presentation is going to be focused on venture capital activity in Africa, with an emphasis on VC investments in technology-enabled startup and early-stage companies. As you can see from this first slide, between 2014 and 2019, 559 VC tech investments were reported in Africa. The number of VC tech deals has been on an upward trend since 2014. 2019 was a record year as 136 VC tech investments were recorded on the continent. In 2019, VC tech investments in the financial services, consumer discretionary, industrials, and information technology sectors accounted for 72% of the total number of VC tech deals by volume. An example includes the $7 million Series A investment round in Instadip, an artificial intelligence company in Africa. The Series A round was led by Afric Invest alongside Endeavor Catalyst. This slide shows the total value of VC tech investments reported in Africa. So between 2014 and 2019, $3.8 billion was the total value of reported VC tech deals on the continent. As we can see, 2019 was also a record year in terms of deal value. In 2019, the total value of VC tech deals reported in Africa was $1,490 million. Some large venture capital tech investments that took place last year in Africa include the $190 million investment round in Zipline International, a drone delivery startup. The investment round saw participation from a consortium of investors, including the RISE Fund, a global impact fund, which is managed by TPG Growth. Another example is the Series B investment round in OPay, an African fintech startup which is located in Nigeria. In terms of VC tech deals by region, Southern Africa attracted the highest number of VC tech deals at 25%, followed by East Africa at 21% and West Africa at 21% as well. Multi-region venture capital tech deals attracted the largest share by value at 52%. Multi-region deals include deals with operations in various regions within Africa. An example of a large multi-region VC deal is the 2019 $100 million Series D investment round in Antela, a company which is backed by Telecom Capital and currently operates in North Africa, East Africa, and West Africa. Multi-region VC tech investments had the largest median deal size at $7.5 million, followed by West Africa and East Africa at $3 million respectively. Between 2014 and 2019, 5 countries within Africa, South Africa, Kenya, Nigeria, Egypt, and Ghana, accounted for 67% of the total number of VC tech investments reported. 23% of the total number of VC tech deals from 2014 to 2019 were in companies headquartered outside Africa. However, these early-stage companies raised money to expand in Africa or further strengthen their African presence. Of these companies, the majority, 52%, are based in the United States. Looking now at the share of VC tech deals by sector, financial services accounted for the highest number of VC tech deals at 23%, followed by information technology at 19% and consumer discretionary at 17%. In terms of value, consumer discretionary accounted for the largest share of VC tech deals at 28%, followed by financial services at 25%. This slide shows the VC tech deals by industry segments between 2014 and 2019. VC tech investments in financials accounted for the greatest share by volume, followed by software and services at 20% and utilities at 11%. Media and entertainment, consumer services, and retailing accounted together for 24% of the total number of VC tech investments in Africa over the same period. Moving on to the next slide, here we can see the share of VC tech investments by sector within different African regions. In Southern Africa, VC tech deals in information technology, financials, and consumer discretionary have attracted the largest share of VC tech investments. Within East Africa, VC tech deals in the utility sector have accounted for the largest share by volume at 21%, followed by financials at 20% and consumer discretionary at 18%. An example of a VC tech deal in East Africa's utility sector is the 2017 $9 million Series B investment round in SolarNow, a renewable energy provider. Within West Africa, VC investments in fintech companies accounted for 31%, followed by consumer discretionary at 16%. An example of VC investment in West Africa's fintech sector is the 2019 Series A investment round in the Nigerian fintech company Lydia, a financial services platform that improves access to credit and finance across fast-growing economies. Alexia Capital, along with other investors, participated in the funding round. In North Africa, VC tech deals in the industrials and information technology sectors accounted for 42% of the total number of VC tech investments within the region. In terms of multi-region deals, financials attracted the largest share of VC tech deals at 27%, followed by utilities at 21%. An example of a multi-region VC investment in the utility sector includes the 2016 Series D investment round in Zola Electric, a developer of solar installers designed to offer off-grid solar services in various African countries. Helios Investment Partners, alongside other investors, participated in the Zola Electric investment. Looking now at the share of VC tech deals by funding round, 34% were seed stage deals. These deals accounted for only 5% of the total deal value. Series A and Series B transactions together accounted for 32% of the total volume and 37% of the total value of VC tech investments. There is also a large number of deals in which the funding series are unknown. Moving on to the share of VC tech deals by investors, 62% of the total number of VC tech investments that were reported in Africa from 2014 to 2019 had participation from at least one VC fund manager. As the chart on the right-hand side shows, a significant minority, 42% of the total number of VC tech investments reported in Africa, had participation of at least one impact investor. Looking at the type of investors that participated in VC tech investments in Africa from 2014 to 2019, PE VC fund managers represented 39% of the total number of investors, followed by PE VC investment firms at 19%. Corporate venture firms accounted for 11% of the total number of investors. Now, if we look at the investors that participated in venture capital tech investments in Africa by region, North American investors represented 43% of the total number of investors, followed by European-based investors at 23%. Africa-based investors accounted for 19%, followed by Asia-Pacific at 8%, and investors based in the Middle East at 6%. Just a small percentage of investors were based in Latin America and the Caribbean. So thank you very much for your attention today.